The entire housing market's been through hell these past few years. Prices collapsing, rates shooting up, and everyone saying real estate's dead. But in the middle of all that chaos, one company just refuses to quit: Opendoor. And what's happening right now is something nobody saw coming. CEOs buying millions worth of stock with their own cash, trading volume exploding, and the stock quietly making one of its biggest comebacks in years. And if you think this is just another hype bounce, wait till you see what the data says, because it might change the way you look at the housing market altogether. So Opendoor is up about 5% today, hovering around $880. The session's low hit around $820, and the high pushed past $9. But what's shocking isn't the price. It's the volume. Over 160 million shares traded when the daily average is only around 135 million. That kind of spike doesn't happen for no reason. That's big money stepping in. And the reason for that? Housing data. Mortgage applications are finally turning positive, up 0.6% compared to last week's negative 1.9. The mortgage market index also rose from 332 to 334. Small moves, but they matter because it's the first real signal that buyer demand might be waking up again. And there's something even crazier: the talk of a possible 50-year mortgage plan. Now, yeah, that's controversial, not exactly consumer-friendly, but for a business like Opendoor, it could be huge. If people can stretch payments longer, it means more buying power, and that means more homes moving through Opendoor's system. Meanwhile, Washington's been playing its shutdown games again, but the vote to reopen things is expected to wrap up tonight. If that happens, it could give the market a short-term boost. Sure, analysts say GDP might dip 2% this quarter because of the mess, but investors don't seem to care right now. They're focused on where momentum's building. And right in the middle of that, Opendoor dropped something big: insider buying. A new Form 4 filing shows CEO Carrie Kaz bought 125,000 shares at $803 each with her own money. Not a bonus, not an option, just straight up open market buying. That's rare. CEOs don't do that unless they're confident about what's coming. On top of that, other executives like Morgan and Erica also said they're buying. Together, they picked up around $100,000 worth of shares and even posted about it, saying, "This isn't just a job, it's a mission." That kind of energy from leadership, it's exactly what investors want to see. Now about the shorts, there's still a lot of them. Around 23% of the entire float is being shorted, which equals roughly 166 million shares. But here's the weird part: the cost to borrow is negative. That means some brokers are literally paying traders to short the stock. That's not normal, and usually means some big hedge funds are trying to push prices down while others quietly load up. But even with that pressure, Opendoor keeps climbing. We're not talking about a wild meme stock-style squeeze, but a steady, controlled move that could easily force shorts to cover. If that happens, the short interest could drop under 20% pretty soon. Technically, the charts are lining up. The Elliott Wave projection puts Opendoor between 980 and 1060 in the short term. Analysts at Mizuho bizarrely slashed their price target from $8 to $1.40, which honestly looks like a typo, because the market clearly disagrees. Options traders are leaning bullish: 28 million in calls versus 5 million in puts, and nearly half of all trades are betting upward. Most bulls are eyeing that $9.50 to $10 range by Friday. Bears think it'll slip under 8, but given today's momentum, the upside seems stronger. Behind the scenes, dark pool data is showing institutional activity. That means the big players, hedge funds, funds that matter, are quietly buying. This recent breakout, that's not retail. That's institutional flow. And when big money starts stepping in, it usually means they're positioning for the next leg up. Right now, key support sits around $7.90, resistance near $9.20, and a breakout level at $10. If Opendoor holds above its 50-day moving average, that's a bullish signal for the weeks ahead. So, here's where things stand. Opendoor just had 4 consecutive green days. That hasn't happened all year. Leadership's buying, volume spiking, Data's improving, and sentiment's shifting fast. Maybe this isn't just a short-term rally, maybe it's the beginning of a real turnaround. What do you think? Is Opendoor making a real comeback, or is this just another fake out? Let me know down in the comments because this story's just getting started. Disclaimer: this video is for informational and entertainment purposes only. Nothing here is financial advice. Always do your own research before making any investing or trading decisions.